Now, in segment 3, we're going to kick off with what's happening with China, what's happening with kind of how their crude flows are changing, and where is that going to put us as we get into, I think, further through the year, just because you have a decent amount of new flow targeting China. You have a lot of lockdowns without any of it really changing. And that's going to leave a significant amount of crude, obviously, that we know about in storage. So this is just, so some of the things that we're going to talk about are from Kepler, because they do a decent job in trying to find some of the data sets. And then we have another one from, there's another one that we also track. And let me just get the name of it quick. Kairos. So we really want to look at what are the two pieces and try to compare and contrast what's happening, because we've been talking about a significant amount is coming from the boats, where we can track those. That's a bit easier. But as it goes onshore, it obviously becomes more opaque, especially when you're thinking about China. So here's where you want to look at what is available in the market. So the inventory buildup. So China's crude stockpiles rise to a 3-month high on weak demand. But what do we know right now? Because here you can see there's January, February, March. Now we're almost all the way through April. We're going into May. The amount of tankers that are signaling China continues to rise, and that's going to continue to keep that pressure, because again, it's just a matter of what is onshore and what is offshore, and we still have a near record amount of stuff offshore. So again, China's where they're obviously the biggest buyer, or I should say growth market, when you're thinking about crude and where crude flows are. And as the biggest buyer really doesn't come around, that is going to leave more crude in the market, as we're seeing in West Africa, and as we've been seeing in West Africa for the last 18 months or so. But now you're starting to see that grow, because even the little bit they were buying, or something below kind of what's called a new normal, as they were picking up discounted Iranian and Venezuelan barrels. But now as the Russian barrels continue to cheapen and they start to kind of go back and forth with picking that up, you're seeing even more cargoes being less left in West Africa, which we're going to talk about in a minute. So China's oil inventories, the nation's onshore holdings at highest since January, Kepler says. Buildup of crude may crimp demand for imports. Then when you look at it where we are, onshore holdings, including commercial and strategic reserves, expanded to about 891 million barrels so far this month. According to Kepler, that's 2.4% higher than in March and the most since Jan. The rise in stockpiles add evidence, again, obviously because of things that are happening. The current rebound in onshore crude inventories in China will likely taper the pace of imports in the near term, but we haven't seen that yet. So I agree, that's going to temper it even more. But that's going to be a matter of, well, you already have stuff sailing, you already have stuff in transit, that still has to show up. So that drop is really going to start to accelerate and going to show up more at the end of May and into June, when you look at May and June buying, where May's, depending on where you are, May buying has already been done. So you're already targeting June. So June buying is going to start to come in fairly weak. And I think that's going to be the biggest piece to watch as we go through. Where are we in June buying as we progress through May? So then when you look at the demand side, so West Africa's exports to China continue to decline. You can see that there's been a fairly steady move lower when you look at 2019 to 2022. And this is what we've been talking about. When you look at, because, and again, everyone likes to quote, oh, well, OPEC is producing less than expected. There's overcompliance, but nobody's buying it, and China's not buying it, and no one's stepping in to buy this West African crude. So why am I going to produce at that level? And again, I keep coming back to that piece. So Senegal and Angola state-owned oil company offered to sell a cargo of Dahlia crude for June loadings at a discount of 50 cents a barrel versus dated Brent. That's down from a premium of as much as $1.60 a barrel being offered for suppliers in May. So again, you're seeing these big discounts come through, and it's dropping precipitously. And again, they start out at one level and they don't just drop right down. You want to see, okay, well, let's test the market. Where can we find someone? And that continues to slow. Now, when you look at seaborne flows of Russian Urals crude to China are at about 93,000 barrels a day so far this month. which compares to 79,000 barrels in March and 104,000 in November. ESPO shipments are to China are at 583,000 barrels so far in April, compared with 597,000 in March. So again, you're still seeing some fairly steady flow. Now, when you look at where things are at this point, Republic of Congo is where we're seeing some of the biggest hits, because the Congo sold most of their crude, if not all of it, into China. And as that has slowed, and that again, we're seeing this in differentials, where Congo sold as Dieno crude as low as negative $4 against dated Brent earlier this month, weakening from minus $1.50 to minus $3.50 for April cargoes. So again, another knockdown. Differentials unlikely to improve in June, given China's buying is set to remain weak, which is, again, why when we start looking forward, April's done. May is, depending on the country, 40 to 80% finished. For Angola and Congo, it should be 100% finished, and it's not, which again speaks more to what we're talking about here, where there's just more volume available in the market. Now, when we start looking again to the crude imports, we still have a large amount targeting China. Now, this could get resold. This could just get slapped into offshore floating storage. But again, there's still a significant amount of crude. It's a record for 2020. It's a seasonally adjusted record. It's a record for 2022. But yeah, obviously, it's still below where we were in 2021 and 2020 for the highs. But just where we are, there's typically this slowdown where all of this stuff is being run through. And it's just, again, showing the amount of crude already in transit, which I think is going to see them have a much bigger stop as we go forward. Now, when we look at Kairos, China's overall crude oil inventories were at 941.95 million barrels as of April 24th, dipping slightly week over week from the highest level since early Feb. Stockpiles of commercial and strategic were at 943.7 million barrels as of April 17th, after building over 4 consecutive months. Breaking at commercial crude stockpiles, they were at 600.16 million barrels as of April 24th, down slightly. And again, so we're essentially between 850 and 1 billion barrels that's sitting there, depending on who you're using, where you're looking, more of these issues in general. 61 cargoes of crude are due to load for Asia in April from West Africa, equating to 1.93 million barrels, not 1.935 million barrels a day, drops from a revised 1.98 in March. So again, still a lot of slowdown. Shipments to China edged lower to 1.04 million, down from 1.07 in March. And that's only going to progressively get worse as we look through May and June, as we've been talking about. So when we look at where some of the things are, Unipec is the biggest buyer. The bid offer spread for Angola and Dieno crude was wide during the April trading cycle, slowing down sales, and we don't see that adjusting. All the reason why is because you have refinery utilization rates still terrible in China, especially on the teapot side and state-owned side. Asia refiners are shunning a major export grade of Russian Far East crude due to sanctions on tanker companies that ship the cargoes. Buyers are trying to back out of purchases of Sokol. At least one shipment for loading in May was canceled, with other refiners trying to wind back June purchases. So just wait for the discounts Russia's about to throw out there, because they need these cargoes to move. Now, they could say, look, there's no price that you can pay, that you can offer for me to take it, because there's no tanker, there's no insurance. But again, the PBOC and the RBI can step in and try to provide that offering. All of this is leading to a near record amount of crude oil on the water. You can see that we're clearly below where we were in 2020, but when comparison to everything else, we are still at record levels, and we just see it just staying at either at 2022 highs or setting new highs for the year. Obviously, you're not going to get to 2020 at this point in time. And the reason why is because a lot of this is crude oil in transit. As we've been talking about, a lot of it is flowing to Asia. A lot of it is slow steaming, aka just taking the long way around to ensure that you're not overwhelming the system more than it already is, especially with the issues on the coast. Crude oil floating storage, this is going to waffle. We do expect this to, as the crude oil in transit starts to transition to floating storage, we expect this to take out the 2021 highs. You can see that we're right at the highs for 2022, but we do think that we're going to, again, move above where we were versus last year. Now, U.S. crude exports, gasoline was up 40,000 barrels a day. That's 273,000 above the 5-year average. That's continuing. When you look at distillate had a drop of 197,000 barrels a day, something similar to what we were saying, but still above the 5-year average. We just expect distillate to really hold in at that 5-year average fairly closely at this point in time, just because even though there's a lot of demand in the U.S. and pricing is there, you're still seeing a lot of demand abroad with better margins. And then you look at propane bounce to 192,000 barrels a day. Still, again, above the 5-year average, that'll persist. And then when we look at total crude oil exports, they were down 549,000 barrels, but still at 3.72. So again, still holding firm. We still believe that we're going to average between that 3.3 to 3.4 million barrels a day on that 4-week rolling average. Now, when we just break it down a bit, you can see just where gasoline exports are from the U.S. This is where they're helping to kind of draw things down as we get some of that pivot, and we will see additional flows coming from Europe into the U.S. And a lot of this gasoline is flowing down into Latin America, into Africa, and even moving as far as parts of east of the Suez. When you look at fuel oil, distillate fuel oil exports, you can see we're right back at the 5-year average. We just think that it's either going to be the 5-year average or just somewhere in the top end of that cloud as things still remain robust exporting in the market. Ethane exports, we had a little bit of a drop, obviously right back to the highs. This is also just as much timing as it is anything else. And as we've been saying, we're just going to continue to set new records on ethane exports. Crude oil exports still seasonally adjusted, all-time high, and that's when you start looking at the amount of exports. We're sitting here on the 4-week rolling average at 3.466 million. We expect to, again, be around that 3.3, 3.4. We're going to be right in this nice little sweet spot. If you wanted to widen out, you could call it 3.2 to 3.4 million, and we're just going to stay at the very high end of that level. You'll get ebbs and flows just given on the traffic, but it's still going to stay fairly strong. Propylene still above the 5-year average. Again, it's either going to be just at the very top end of this cloud, either new seasonally adjusted highs or just remaining elevated in general, and that's just something that's going to persist as demand remains robust. The Dubai swap, versus Brent continues to weaken. It's now at only, it's only cheaper by $5.60. So again, this is more and more pressure coming into dated Brent, trying to discount, trying to move things through. So you're seeing the spread really narrow between Dubai and dated Brent. So again, there's going to be more pressure in terms of how is the GCC nations that have priced their OSP at $9 above Dubai, which is closer to $9 plus above Dubai, which is sitting at, if you think about it, that's about $4.50 more expensive than dated Brent. So the question is there going to be some demand for that, given West Africa trades off of prices off of dated Brent? And that's where we're going to see some of these pressure points. All the while, refinery margins continue to explode higher. This is all a large part of it is driven due to the massive shortage in middle distillate, especially on the diesel front, which is why you're seeing the hydrocracking continue to be at the top end of that level. Hydrocracking on both sides, when you look at hydroskimming, that's the weakest because gasoline doesn't have the same issues, and as well as the light FCCs don't have the same issues as when you look at the hydrocracking highest output of middle distillate. That's where you're seeing it, but it's also expensive because you have to make the hydrogen to do the cracking. And so it takes a lot of natural gas, and LNG prices are still at near record highs. So again, they have to balance that out when you're looking at cost. But all of this is leading to record highs across the board, especially even for record highs for 2022. and things still will stay strong in the Asian theater. Now, when you look at exports, you can see that exports for Russia continue to trend higher. There's about a fixed level that can be hit, which is about 4.7 million barrels a day. That is about the highest that they can hit, and that's just a structural limitation in terms of slips, pumps, tanks, all pipes, all that little piece. So again, they're going to try to get as close as they can to the top end. And again, 4.7 is the top. It doesn't mean that you're going to get there, which is why we could see between 4.5 and 4.6 million barrels a day from Russia trying to get into the open market. Now, when you look at across the board, you can see that things are still fairly stable. Norway's right in line. Nigeria, again, continuing to remain fairly flat. Same with Angola. We don't see too much changing at this point in time. We've already talked about pricing, so I don't want to regurgitate it. Here you can see that in the Genscape side, when you look at what's happening in Europe, we're back. We have a 2022 record amount of crude in stocks, but that is still below that 10-year average or 9-year average. So we see it just kind of holding this level just because demand continues to fall. And you're just not seeing a huge shift. But again, it's just going to follow this 9-year, this kind of purplish line, or if you want fuchsia line, as we go through and stay within this level. So again, not too much going up or down. When we look at flows at storage, gasoline, again, back to at a record, had a build of 13. When you look at gas oil, another drop of 24. It is the Europe continues to attract a lot of flow from both the Middle East and from India and east of Suez. India is sending about 30% of their diesel in distillate into the European market, but yet Europe wants to sanction India for importing Russian barrels, but India uses the Russian barrels to make the distillate that that Europe needs. So again, I don't think you can say a lot of things, but I don't think that's going to happen, especially as the ruble fight continues between how are they going to pay for natural gas. So again, when you look at this, still at a very bullish backstop. The only lower period was 2008. So again, still a lot of pricing to be had. Now, when you look at gasoline, this is what we were talking about. We're at a seasonally adjusted record for amount of gasoline in storage. This is going to incentivize, again, more exports coming from Europe and flowing into the U.S. market, i.e. PADD 1 and the East Coast. Now, when you look at fuel oil, fairly stable. We don't see this adjusting too much one way or the other. So this is just going to be a fairly stable. It'll be a mixture of what is going to be recracked, what is going to be exported into east of Suez. Because when you look at it, the Asian markets, as diesel prices just continue to explode, they're going to slide down and consume more fuel oil, high sulfur diesel. Now, when you look at Singapore, what we were saying was going to happen. We had this kind of big makeup shift where we went from 38.3 million barrels a day of product in stock to 45.1 with builds across the board. That's we just think that we're going to hold this level. One of the things is we thought we were going to kind of retake this 15-year average or so that we're just going to hold here. You can see that purplish line right there, where you're just going to see this kind of hold where light distillates will remain elevated, residual will waffle. But then when you look at middle distillate, even though there was a build of about 2.4 or 1.4 million, even though there was a build of about 1.4 million, it's still at a very bullish backdrop, and we don't see that adjusting as well, while light distillates will remain a bit elevated. So when we look at light distillates, we're back above that average. We expect to stay above that average. These two drops, there was a lot of that was timing. A lot of that was because of the holidays. Now that we're back up, we just think that we're going to stay above that average. While when we look at this big increase in middle distillate in Singapore, it's still going to stay well below the average. So again, it's just a matter of, what are you trying to make as much middle distillate, try to make as little as light distillate as possible, all the while. And then when you look at resid, heavy distillate, this is going to remain near record highs until we start to get a bigger shift from the middle distillate to the heavy disty residual side on the emerging market front. Until then, these will remain elevated. Now, when you look at what happened in Fujairah, there was total stocks fell by 971,000 barrels. Light distillate and heavy resid posted draws, but we do expect to see, especially on the light distillate side, that reverse. Light distillate fell 195,000 barrels. The East of Suez gasoline market strengthened on a bit on stronger demand from Indonesia, picking up amidst the upcoming end of Ramadan. So again, as we get to the end of Ramadan, you'll get a little bit of a bump, and then we think that demand will slow down as we go forward. And then with gasoline blending interest appearing to be high, naphtha remains cheap, and that's being used as a blend stock. So again, just kind of looking at some of the different shifts. Middle distillate had a build of 105,000 barrels. Gas oil market still remains strong. You're still seeing tenders. India's increasing exports. And as China comes back, we do expect to see them increasing exports as well to, remember, try to balance some of that inventory. Heavy resid fell by 881,000 barrels a day. Again, held above the 11 million barrels for the third consecutive week. There's, again, elevated. When you look at the bunkering side, global trade continues to slow, struggling a bit. So we do see heavy distillate remaining a bit elevated. Then when we look at Brent time spreads, you can see that they're right at 38 cents. So we're right back to where we were in 2021, and we just don't see that really adjusting at this point as we kind of get this back and forth when we're looking at where some of the pricing is. Asian floating storage remains near 2022 highs. We think that this is going to pivot up, but very similar to what we saw in 2020 and 2021. So we don't see too much of a deviation. It's just going to be a matter of when does the transit go to floating storage. So it could kind of come over and then move back up. But again, we still see a lot of Asian floating storage, and we see it increasing. North Sea back at the lows, but again, it's just kind of waffle back and forth as there's more than enough space in onshore storage, and there's more reason to try to bring as much in as possible, given where prices are versus West Africa. West Africa continuing, in comparison to the Middle East. West Africa, again, floating storage moving back to the highs for all the reasons we highlighted earlier. We don't see that changing. We do see a bigger discount coming when some of this, we see this being attracted more into the European and U.S. markets, i.e. PAD 3. So then when you look at the Middle East still remains high, and as the Dubai Brent spread tightens a bit and goes from, where it was as wide as almost north of $15 to only just north of $5, that's going to leave more and more crude in floating storage, and we do expect this to break out back to the highs, obviously not back to where we were in 2016, but back above from where we were in 2021, and this leads to what we think is going to be a little bit more cautious or more cuts in OSPs as we head into June. This could have been done on purpose, obviously maybe trying to leave a bit more crude in storage, onshore storage, so that they have more for the summer burn. But the Middle East has also been using a bit more natural gas, or especially every year they've been using more and more and more over the last 7 to 10 years, trying to limit the amount of fuel oil that is burned, increasing their natural gas consumption for heating, for cooling. Europe, floating storage still remaining fairly stable. Again, timing, we went from floating storage to onshore. So Europe floating storage went down, onshore went up. It's just going to be a matter of kind of that back and forth. So that's what we have for you today on the EIA show. We're going to have more data, especially on the shipping front and on some of the economic pieces in the econ show. So stay tuned. It'll come out tomorrow. But as always, thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.